Good morning from Europe, March 16. It's Monday, and Sahara will be with you with the short market update. We'll see what's happening here, what's happening in on the geopolitical world and the economic world, what's going on, and what we are expecting to see later today. And also, generally, we will check overall outlook also for the week ahead. We are at the beginning of the very, very important week, the week of the central banks, which we will have the central banks meetings. At the same time, we know that following the revolution was happening in Iran, now we have the war there, the war which is between the Islamic Republic based in Iran and Israel and United States. On the other hand, this geopolitical tensions happening in the Middle East, happening in the Persian Gulf and the Strait of Hormuz, affecting the financial markets very rapidly. We know that the oil price has been jumped, has been increasing in the recent days after reaching towards to closely to $120, fell to almost 80 to $83, and now again slightly increasing. WTI price around $97, while the crude oil is $103. Now the market is looking at the geopolitical tensions where this how far that can go further. We know that the United States already attacked the Khark land in the Persian Gulf, which is the part of the Iran, as that place is the center or the hub for oil export for Iran. We know that the deep of the beaches in the Persian Gulf with in the Iranian side is so low. That's why they're using the Khark as a hub for export, where they are using to fill the cargo ships, oil cargo ships. That's why, oil tankers actually. That's why it's very important for Iranian. More than 90% of Iranian oil exports happening from the Khark. Why do you not say attack to the Khark? They say that if Iranian they do not allow the other tankers or cargo ships generally to cross the Strait of Hormuz, we will not also let the Iranian to export the oil. As we know already, the Chinese ship and the Chinese cargo ship and the tankers, they could pass through the Strait of Hormuz. Iranian, they let them to go through. And we have a news that in the recent days, the Indian also they started to use the Strait of Hormuz after they talked with the Iranian regime. At the same time, we know that the Donald Trump asked the other economies and countries to go towards Strait of Hormuz and the Persian Gulf and take their part to secure this strait, as we know that already Americans or Americans don't they don't need the Strait of Hormuz to for their oil. We now already that the Americans they have their own oil, and they have the Venezuela now. They have a zero depending on the oil from the Hormuz. But at the same time, we know the Japanese, Chinese, Indians, Koreans, they are so dependent, their economy is so dependent on the oil and the prices coming from there. So that's why the Iranian, American, they want them to take a part. We will see what will happen. So far, they didn't have a positive reaction to Donald Trump's call to come and take the part in this area. That's increasing the geopolitical tensions there. I don't think that what I see that the United States is trying to control the Hormuz, but they do not, they do not have such a high priority yet, because we know that already Donald Trump also warned the NATO if they do not take a part there, they're going to see the bad future. I mean, the future is not going to be very polite for them, already these things. And I think that the Donald Trump is trying, before they put all their 100% to control the Persian Gulf and Hormuz. They want other countries also come and take a part. Why? Because that can help the Americans government, the United States, especially if the Republicans, to sell that war better to Americans and tell that, okay, that it's not just our war, it's an all world war, and all the countries they're taking part in this war. So the Democrats will have less issues in the less opposition they will be against for this war. That's the general idea. That's what the United States trying to bring other economies and other countries also there to involve. However, we know that the NATO and other European economies already they are indirectly they are joined already. They joined already the war as they are taking a very important part of the defending of the Arabic economies, Arabic countries around the Persian Gulf. We know that the French and German, especially the French, they are helping the United Arab Emirates and other Arab economies there to defend themselves against Iranian missiles. That's what's happening. But what the United States wants this, they want them officially to join this war so they can sell it better to the American and other nations as well. That's what's happening on the geopolitical front. We know this week also is going to be a very, very important week. It's the week where we have the central banks meetings forward. The central banks are very, very important this week in line with the other geopolitical tensions. The center of the central banks meeting will be the Federal Reserve later this week. The Federal Reserve is expected to hold the rates at the current period between the 3.50%, 3.75%. That's what we're expecting to see. And the market is counting more than 99.2%. But the question is not about whether they're gonna hold the rates or not. It's already there. We know already that's happening. The thing is that how they're affecting to the news, what will be the tone of the statement and the dot plots, which will be very, very important in this meeting. The dot plots will be at the center of the stage. And economic expectations that S&P, SEP that they're going to provide. This economic expectations of the Federal Reserve and the dot plots will be very important. However, we should also watch the expectations for the rate cut for the April and the June meeting. We know for the April it was around the rate cut. It was around I mean holding the current rate actually. Let's say in this way, holding the current rate had around 55-60% chance. Now it's increased to 93%. The holding the current rate for June meeting had around 45% chance before the war starts, and has actually had a less than 40% chance. Let's say it this way. It has a less than 40% chance. The rate cut had 45% chance for we had for 25 basis point rate cut and about a 5% rate cut of 50 basis point. And now after the war start, the holding the current rate chance from 40% increased to 75%. That means that the more hawkish, that's more hawkish expectation means that the higher for longer. That's the reason we can see the rates for the bonds increase. In recent days, we know that the US bond yields increased to around 4.35%, 34%, now slightly lower at 4.26%, almost 27%, but still it's so high. That's a very high level. That the same thing we can see in Japan and other economies that their rates also increase. That's increase that says that the premium risk is so high these days that makes that increase the especially in United States increase the chance of higher for longer will support the US dollar, put the pressure on the stock markets, and at the same time with the increasing the US dollar, as we know that the dollar index in the recent days increased. The dollar index right now trading at 137. That's put the slightly pressure on the gold price as well. We know that the gold price around the $5,000. It was above $5,100 recent days in the last week, but now it's around the $5,000. In a short period, it can pressure the gold price because the higher yields, stronger US dollar, at the same time stronger oil price or higher oil price WTI around $100. All of these prices can put the pressure on the gold price. But in a bigger picture, still the gold and silver, both of them, they are still in a buy position. The same condition and situation we can see for the stock markets as well. The stock markets also on the other opposite side, they are generally in a downward position. However, earlier today with the comments that we had from Pentagon, with the comments that we have from the CENTCOM about the oil, about the process positive improvement that they had in a war, and generally the outlook that they will be able to take a control of the Persian Gulf and the Strait of Hormuz, all of they slightly help the stock stock markets. At the same time, we had a very good news from the AI stocks in China, especially that all of them they could support the stock prices, and we can see overall the mixed price, especially in the Hang Seng, in Hong Kong with the AI chip markets, AI chip producers. Uh, I forget the Chinese name. It's very hard. This company increased more than 7%. That generally increase this. I mean the positive tensions, the sentiment during the stock market. But the stock market, the downward in the recent days that we have is slowing down right now, and we have positive reaction. We can see that in the future market in the United States, they already increased. The same condition we have in the cryptocurrency market. You can see the Bitcoin is around $73,000. It was about $74,000 earlier in a weekend as well. Generally, we can see the cryptocurrency prices higher. Bitcoin price about $72,000 can take positive shapement and can take overall bullish trend. Generally, what we can see here, the risk premium. I'm saying about the risk premium because you can see the weeks around 27. That was around 30 last week, and now it's around the 27. Means that the compare with the previous days is slightly lower. That's the positive news generally for the cryptocurrency market. However, the bill that we're gonna have later this week also to be passed, that generally they talk about that also can support the market. That's generally what's happening here. In the economic calendar, as mentioned, later this week, we will have very important meetings in the central banks. Tomorrow, the Reserve Bank of Australia will hold the meeting, and then we will have the BOC, BOE, ECB, BCB, the central banks in, let's say, in this country, the name of by the name of the countries in Australia, Canada, Eurozone, United Kingdom. We will have the central bank meeting in Switzerland. We will have the central bank meeting in Brazil. But as mentioned, the main and the most focused will be in the United States with the Federal Reserve meeting on 17 and 18, with the statement at 18 and dot plots as well. However, about the overall, for all these banks, we are expecting to see that they're gonna hold the current rates. However, before war starts, we were expecting from the central banks in Brazil and United Kingdom in BCB and BOE to cut the rates by at least 25 basis point, or even for the Brazil, we were expecting 50 basis point rates cut from 15% to 14.50%. However, after the war started with the inflation increasing, especially for the oil price increasing, now the market are expecting from the central banks to hold the current rate and pass the current situation and recover, I mean, somehow to cover this current situation with the risk premium, the inflation risk premiums, and then after this situation is over, they can continue their normal policies. For now, for this week, for these central banks, we will have the central bank meeting in China as well on Friday. PBOC. For all of them, we are expecting to hold the current rates. So far today, we had a Nielsen performance of the service sector increase slightly eased from 50.7 to 48. Electronic card retail sales increased slightly better compared with the previous month, with 1.4% on a monthly base and 1.5% on an annual scale. In United Kingdom, we had the house price index falling by 0.2% on annual base and increasing slightly by 0.8% monthly. That shows generally that the inflation, the house market inflation, is somehow under control. That can support the idea of the rate cut. But as mentioned, the cautious comes after current oil prices and increasing the energy prices. In China, we had a very mixed data, but generally we could say that numbers, they were positive, as retail sales increased by 2.8%, as fixed asset investment increased by 1.8%, especially after several months of falling. By industrial production so far in this year and annually increasing by 6.3%. They were positive. But on the other hand, we had some negative news as well, which was on the labor market. Unemployment rate increased to 5.3% from previous 5.1%, while market was expecting to see the same unemployment rate. And also the house price index fell by 3.2%, which is very, very bad and negative news for the housing market in China. In India, the whole price inflation increased by 2.13%, actually, somehow we can say, and says that but the whole price for the energy, actually, for the fall in energy fell by 3.7% in February, but for March it's going to be increasing very rapidly. Generally, the inflation we can see in India is still the concerns. Later today, the most important number will be inflation numbers in Canada, especially before the BOC meeting. While we are expecting to see the February inflation is expected 0. While we are expecting to see the higher inflation in March, in February also is expected to see the inflation increasing by 0.7% on a monthly basis. Annually, it's increasing by 2.3, 2.4%. That can bring the cautious policies for the BOC to hold the current rate at 2.25 basis 2.25% at the current rates, no change. Today we're gonna have the industrial production and manufacturing production numbers from United States as well for the February, and we're expecting to see slightly increasing. That can be slightly, not a good or strong increase. That's overall what's happening here today in the markets. We talked about the week later, we talked about the rates, we talked about the geopolitical tensions as well. Hope it was useful for you. Talk to you tomorrow. Have a good day. Stay safe.